Hi and welcome to the Market Alert for Tuesday, the 20th of September 2022. So Bitcoin and big tech dump and pump as yield curve inversion accelerates ahead of the Fed meeting tomorrow evening, where Powell is expected to raise rates by 75 basis points or 100 basis points. We'll just have to wait and see. There's an awful lot of really challenging things being thrown at the market, absolutely. Choppy, Illiquid trade ahead of a swarm of central bank activity, according to US market wrap, and Wall Street sentiment gradually improved from the holiday restricted trade in Asia and Europe. So we're back to normal today. Economic news items for today. We've got German PPI that's out at 7 a.m, which you'll see there is forecast for 2.5. It was 5.3 before, so more or less 50% less. Current accounts from the Eurozone as well, but that's probably the main one for today. Lagarde, the criminal Lagarde, will be speaking at 6 p.m. And then tomorrow, as I mentioned before, we move over to the main topic of the week, FOMC, and then on Thursday we've got MPC for the UK as well. Gold silver ratio is sideways to higher there, not a lot to report. So let's get on and have a look at what the markets did yesterday. So the UK market was closed yesterday, and some of Europe as well, but the markets moved higher, as you can see there, coming off that 89% retracement and up slightly on the overnight as well, still trading above the 5-bar moving average in the daily chart. The 30-minute chart, you can see again the market coming off that low. I keep going on about how important the low and the high is in the markets, and this is exactly what happened. We see the Dow moving up to the previous high, Friday's high, and then finding some selling, which is normal. We came back down to the daily pivot, and inside of the daily pivot we had an 89% retracement at the 50 EMA, the blue line, and we also had demand there. And then the market was free to continue to move to the upside. And this is yesterday's high now, where the market is currently trying to get back above. So getting back above this high is very important. And if we do this, then we go back to the daily chart and we'll draw in some fibs to see where the market is likely to encounter some resistance. And there you can see we've gone through the 38 already and the 62. The 78 and 89, if I just move this over, you will get the two sets of numbers that you will need to keep an eye out if you trade the Dow, where 89 and 78 will be a resistance area. We've been through the 78, but at the moment we're back below it or just trading at it. And if the 89 is taken out, then these two areas here will be interesting as well, 31,279. But keep in mind the market's waiting for tomorrow's rate decision, so they'll try and keep the market moving to the upside in anticipation that it could be bad news, and then the market's got a bit of a buffer to come back down with. In the German DAX, a bit of a similar picture, but we haven't closed back above the 5-bar moving average as the Dow had done. We also double bottom yesterday down at the 12,594. Let me just have a look. Yeah, 12,594. You can see the market there. There we go. So yeah, double bottom. Not a great deal of volume for yesterday, but the market moving up because it was free to do so. As I've said, if there's no economic news and either Europe's closed or the US is closed, the market generally moves to the upside because nobody wants to sell into it. There's no great selling. And in the 30-minute chart, you can see this. We came through the low. We sat on it for a moment or two. And this is something that the traders will do as well. They'll move the market lower to get traders to go short. The clue that they're not going short is the demand that comes into the market. They start to buy, and then they start to take out the stops. And as they take out the stops, the market accelerates because those traders that are short, having broken the low, think the market's going to continue. And then to get out of those trades, if the stops are taken out or they voluntarily get out of the trade, they have to buy back the contract. Buying back the contract creates more buying and then moves the market to the upside, which you can see there. And then as soon as the US came on stream yesterday, it was a vertical rise from the off, and the DAX had no choice other than to follow it. So we see this yesterday. We didn't quite get to Friday's high. We did in the evening and late on, but we've got the high now of yesterday in place there, 12,899, so 12,900. We're not far off that psychological level of 13,000 for the DAX, which is going to be interesting as well to see. Well, we're going to be 100 points away, aren't we, for that? Let me just have a look. There we go. There's the 13,000, which is up at the R2 level there. You can see it. So we're actually 200 points away, not 100, as you can see there. We've got the 200 MA in the way as well, and also we've got to get back above the high. We should imagine that we'll have no trouble doing this when the futures kick in at 7 a.m. until, of course, the cash market opens if traders want to offload some stocks, but we'll have to wait and see. In the 5-minute chart for yesterday, like I say, we had a move to the downside initially. The market then traded sideways. The cash market opened and we moved lower. We traded sideways and tried to come back. We got to the 50 bar moving average just above the BRN there at 12,000. What was it? 700. This is 12,700. And then we moved lower. We took out the low. There's the low there. You can see we got back above the low, but we couldn't hold. Went down and retested, and then they brought the market back. And then as soon as the US opened, it was just a vertical rise of 150 points, actually nearly 200 points. It was 200 points, taking the bit above the top there and putting it down the bottom there. Yeah, just under 200 points. In fact, it's going to be interesting just to see how far it did move. So from there up to there, yeah, 203. Yeah, you can ballpark most of these and guesstimate the move. So yeah, 200 points there. And then overnight the markets tried to get and hold above yesterday's high, but failed so far. It got slammed back, which is interesting. So will that happen again when the market gets through this level? We'll have to wait and see. But at the moment the market's sideways. I would imagine they'll have a go through the high when the futures open, but this will be some resistance. And I will certainly mark up from there to there and have a look, see how the market fares at 12,913 should it trade to this level. Forgot to mention yesterday, we've got last week's total, which I don't know why, but I forgot about, 11.55 and a profit factor of 6.14. We had 70% winners to 30% losers last week. Again, nice yield curve to the upside. The total, the end of last week from the 19th of January, now stands at 29,290. We're still at 55.45 on the win to loss ratio and 2.37. So we've got 2.3 of average winning to average losing trades there. And then yesterday, tried a couple of shorts in the afternoon against that Dow moving to the upside, which took a few profits off, but nonetheless still 224, and we have 63.37 and 3.39. So another good start to the week as well. So yeah, more than happy with the results from January, and it just consistently plays out. And the more time you spend looking at the background of the market, which is what I do in the alert, the easier it is to trade, because you've got a good idea where the market is likely to trade to. In the S&P yesterday, the market also moving back to the upside off the 78% retracement to the 5-bar moving average. It's attempting to try and hold above there at the moment. On the upside, these are the targets for the S&P. And you'll see there we've got 3 lots at the 62, 78 and 89. And then, of course, we'll have the high to the left here as well, where we saw the last bit of selling at 3962, which would be very important if you trade the S&P. The 30-minute for yesterday, as I said, the Dow and the US markets just took off to the upside. There was no European selling, straight off the low. It's textbook stuff, and continued to do that overnight, just trading back up to yesterday's high at the moment. And holding as I record. The UK also moving high yesterday. Just look at the volume for yesterday in this market, bringing it back off that 89% retracement. Again, if the market continues to move to the upside, let's just redo this. So from there down to there, these are the upside targets for the FTSE, and in the 30-minute chart you can see also sitting on the low yesterday. But what moved the market was the US. Now obviously the UK traders were missing yesterday, but once the Dow kicked off, then the derivatives in the UK were used in order to follow the Dow, and that's what we see. Again, the high needs to be taken out in order to continue to move higher. In the two currencies, the yen coming off the 62% retracement, the 20-bar moving average and the 50 EMA need to get back above the 5-bar moving average there. The market, particularly currency sector, is waiting for tomorrow's Fed announcement, but these are the upside targets in the short term for the yen. Yesterday, very choppy. Again, like I say, the market waiting for Powell, but moving up as the dollar traded and came on stream yesterday at 1 p.m. And in the pound, not a lot for yesterday. Again, UK very quiet for the obvious reason, and sideways overnight. The 30-minute chart, we see the pound trading down to towards yesterday's low, stopping at the S1. Then we get the classic retracement, and then we moved higher as the dollar moved lower, and now we're trading back up to yesterday's high and close for the pound. Of course, Thursday we'll see Bailey increase rates by 75 basis points, if not by a full point, as he missed a month with the Queen's passing. So we'll just have to wait and see if he's got the courage, I think I'll put it politely, to actually do this. I mean, the inflation situation isn't going to stop until interest rates are higher than the inflation numbers, which is not going to happen, is it? Because the whole of the housing market and economy will be destroyed if he does that. So he's hedging his bets and just seeing if he can temper the rise slightly. And finally, in the metals, silver remains sideways. You can see there 38 retracement level and stuck on the 50 EMA at the moment. But it's been looking fairly strongish, but I wouldn't be at all surprised if we don't get another hammer to the downside after tomorrow once Powell's made his decision. You will see a spike to the upside first after the rate increase, but then likely to come back down. Again, yesterday very quiet till the US markets opened in silver and managed to move higher, but stuck in a sideways range there. Gold, interestingly enough, has traded down to 1654. That was on Friday last. And then you've got the market sideways, a bit of resistance here as well, as you can see, and coming back down there. So we're looking for another retracement and maybe a retest of the lows in the gold market. They're certainly putting the pressure on this market and keeping it moving to the downside, as can be seen here yesterday. Nice retracement, and that was at the S1, and then the market moving to the upside. The dollar yesterday down, which is why we saw the pound and the yen stable, moving to the upside for the pound. And these are the targets on the upside for the dollar index, which will be interesting to see if they hold and can get back above that 110 level. Generally, a rate increase is positive for a currency, but we'll see. And crude oil sideways, stuck in a range once more, but back to an 89% retracement for yesterday, and attempting to try and move back to the upside there. Okay, that will do for this one. This is the penultimate day before we get the Fed, and then Thursday we get the Bank of England rate increase. Okay, that's it for me. As ever, thanks for watching. See you in the next one.